You wake up at 3:47 a.m. again. The chart glows back at you like a silent judge. Red candle, stop loss, gone, again. You breathe, but it doesn't feel like breathing. Your hand is hovering over the mouse, but you don't click. Not yet. Because something inside whispers, maybe it wasn't the market. Maybe this time, it was you. You've tried everything, haven't you? RSI, Fibonacci, Bollinger Bands, clean setups. You've watched the gurus, memorized the playbooks, bought the indicators. And yet, here you are, staring at a red candle, wondering why it hurts more to lose $20 than it should. Wondering why you break your own rules the second things go live. Wondering how a green candle makes you feel alive, and a red one makes you question your worth. No one tells you this at the beginning, but trading isn't about entries or exits. It's about psychology. It's about your unresolved patterns. It's about the part of you that wants to be right more than it wants to be consistent. It's about the childhood approval you still crave from numbers on a screen. This isn't a strategy problem. This is an identity war, and that's why most traders fail. Because they think trading is about knowing, but real traders, the ones who survive, they realize something bigger, that the market doesn't care who you are, but it will reveal it, candle by candle, decision by decision, until you either break or you rebuild. Welcome to Trading Psychology Stick. Before we dive deeper, quick disclaimer, this isn't financial advice. This isn't a magic system that'll make you rich overnight. This is psychological education based on real trading experiences and behavioral patterns. Your results will depend entirely on your own decisions and emotional management. In this series, you're not just going to learn trading psychology, you're going to go inside your own patterns. You'll see why discipline fails, why consistency never sticks, and why your most expensive losses have nothing to do with the market. You're going to see the part of you that sabotages, and you'll learn how to make peace with it. Because the truth is, trading is the most honest mirror you'll ever face. And the sooner you stop treating it like a game of strategy, and start treating it like a spiritual dojo, the faster everything changes. This isn't going to be comfortable, but it will be honest. And by the end of it, you won't just be a better trader, you'll be a freer one. This is not financial advice. This is not a system. It's a mirror, and it starts now. Chapter 1. The Mirror of Trading. You sit down in front of the screen. It looks quiet, but you know better. The candles move with no warning, no apology. And in the back of your mind, you tell yourself, just one trade, just one win. That's how it always starts. That's how the mask begins to form. The mask of the self-assured trader, the one who's done the back testing, read the blogs, memorized the setups. But underneath, your heart's racing, because this one trade, this one moment, suddenly feels like a verdict, whether you're enough, whether you're capable, whether you belong. And that is the trap. Most traders treat every single trade like it's the final chapter. The market says, this is just one line in a long book. But your ego says, this is the whole story. And that's why you press too soon, or hold too long, or move your stop, just a little. Because if this one fails, something in you feels like it breaks. Mark Douglas called it the fatal illusion, the belief that you have to be right, now, that you can predict, that this trade must validate you. But trading doesn't work that way, and the market doesn't bend to your identity. It reflects it. I want you to picture a trader from a prop firm in Chicago, real case. His name was kept anonymous in a training module, but the lesson stuck. He had 5 wins in a row, all small but clean. Confidence grew. Then came a setup he didn't fully understand. A sudden move on GBP USD during London Open. He entered anyway. Bigger size, his logic. I've been winning. This one should follow. But it didn't. Within 6 minutes, price reversed. He averaged down, tried to manage the loss. By the end of the session, he wiped 1/3 of his monthly profit. His mistake, he wasn't trading the edge anymore. He was trading to protect the illusion of being a winner. One trade became everything, and that's the beginning of destruction. Because when you put your self-worth into one candle, you give away all your power. You stop thinking like a system. You start thinking like a gambler. But there's something deeper happening here, something that started long before you ever saw a chart. You see the signal, the setup is clear, everything aligns, but something tightens in your chest. A whisper rises inside your head. What if this one fails? What if I'm wrong again? You hesitate. You resize. You second guess. Not because of the chart, but because of your history. The need to be right doesn't begin with trading. It begins with childhood, with classrooms where mistakes meant embarrassment, with parents who praised achievement, not effort, with early moments where being wrong felt like rejection. Now that pattern has a new name, trading psychology, and it's bleeding into every decision you make. Most traders don't fear the market. They fear what being wrong says about them. That's why they fight stops. That's why they revenge trade. That's why they quit systems that statistically work, just because they hit a losing streak. In truth, they're not reacting to the system. They're reacting to shame. A trader once shared on Reddit's R4X a story about his turning point. He had backtested a strategy on AUDJPY for months. He knew it had a 55% win rate. But when he took 3 losses in a row, he couldn't take it. The 4th setup came, valid, clean, and he skipped it. That trade would have been a huge win. He missed it. Not because he lacked information, but because he couldn't emotionally afford to be wrong again. That moment haunted him, because he realized he wasn't trading his edge. He was trading to protect his ego. And ego doesn't care about statistics. It cares about stories. It says, if you're wrong again, you'll look stupid. If you lose again, you're not cut out for this. That voice is ancient. It's not analytical. It's emotional. But here's the key. The market doesn't reward ego. It rewards neutrality. And neutrality only comes when you stop seeing trades as tests of your intelligence. You are not your trade. A loss isn't failure. A win isn't proof. They're just data points in a system. That's it. Until you make peace with being wrong, you'll never stay long enough to become right consistently. So, what does that look like? It looks like detaching your self-worth from your outcomes. It looks like trusting your edge through losing streaks. It looks like saying, yes, I lost, and that means nothing about me. The best traders aren't fearless. They've just learned to redefine what failure means. For them, being wrong isn't a threat. It's an expected part of the game. And because they don't take it personally, they move through it faster. The real question is, never will this trade work. The real question is, can I place 100 trades where no single one defines me? That's the difference. One trader looks for the perfect trade, the other builds the perfect mindset. Which one are you becoming? This chapter isn't about systems. It's about detachment. It's about freeing yourself from the emotional gravity of one outcome. And that takes practice. That takes awareness. And it starts with seeing how often you've been trying to win just to feel okay. That ends today. Because in the next chapter, we'll dive into the war that's really destroying your trading, the invisible battle between what you know and what you believe. Before you continue, take a moment. Write down the last trade that kept you up at night, not the whole story. Just the ticker and the feeling. Maybe it was EURUSD and it made you feel like a failure. Maybe it was Bitcoin and it made you question everything. Whatever it was, acknowledge it. You're not alone in carrying these moments. Every trader has them. The difference is what you do with them next. Chapter 2. The war inside your mind. You can have the best system in the world, perfect entries, flawless risk management, a proven statistical edge. But if there's a war inside your mind, none of it will matter. Because trading isn't just logic, it's belief. And beliefs don't live on your screen. They live deep in your nervous system. Most traders carry 2 sets of beliefs. The first, conscious beliefs. These are the ones you write in your journal. I trade probabilities. Losses are part of the process. I follow my plan. But underneath those are unconscious beliefs, and they're louder. I hate losing. If I'm wrong, I'm a failure. I need this trade to work, or I'm not safe. And when those 2 belief systems collide, discipline breaks. Your conscious mind says, I trade probabilities. Your unconscious mind says, but this time, it's different. It's like having a Zen master and a gambling addict sharing the same brain. Guess who usually wins when the candles start moving? Let me tell you about a trader from London who shared his story during a mental resilience workshop. He had been trading EUR GBP post-Brexit volatility. He believed in his edge. He had months of backtests. But every time he saw price stall, he panicked, closed early, or added too soon. After 6 months of inconsistency, he finally sat with a coach who asked him one question. When you lose, what does that say about you? And he broke down, because he realized, for him, losing meant weakness, and weakness was never allowed in his family growing up. That belief, embedded years before he ever saw a chart, was now defining how he executed his trades. It's not always that dramatic. Sometimes the belief is simpler. I need to make this back. If I stop now, I wasted the day. I can't follow the plan because it feels slow. But whatever the belief is, if it's in conflict with your method, it will win every time. Because your beliefs shape your perception, and perception shapes your decisions. That's why you exit early. That's why you move your stop. That's why you skip good setups after 3 losses in a row. You think it's about the chart, but it's about the story playing silently beneath your actions. And here's where it gets dangerous. It only takes one win, one oversized trade that goes your way, one impulsive entry that hits green, and suddenly you feel powerful, intuitive, like you've cracked the code. You say to yourself, I knew it. But that win was a trap, because it didn't come from process. It came from luck. And now that single win has planted a new belief. Maybe I don't need rules. From that moment, every trade becomes a performance. You're no longer following your plan. You're trying to repeat the feeling. And that's when things fall apart. This happened to a trader on Reddit's R-Day Trading forum. He caught a breakout on USDJPY and doubled his account in 1 week. But instead of stepping back, he increased size, abandoned stops, told himself he had momentum. 2 weeks later, he'd blown the account. Not because the market turned, but because his mindset did. His belief went from, I trade my edge, to I am the edge. And the market punished that belief with brutal honesty. Another example, a crypto trader on Twitter shared his story after a $190,000 altcoin loss. He said, I thought I had a sixth sense after 3 consecutive wins, but I wasn't trading the market. I was trading my ego, and it cost me everything. These aren't rare stories. They're common, because the trade-by-trade mindset is the default human instinct. We're wired to assign meaning to each event, but trading punishes that instinct. It demands detachment. You must treat every trade like a coin flip with edge. No emotion, no identity, just repetition. That's the mindset professionals live by. They don't get high on wins. They don't get crushed by losses. They trust the long game. They understand that the outcome of one trade has nothing to do with the next. So, how do you change that? First, you name it. Every time you violate your rules, pause and ask, what did I believe in that moment? Write it down. Build a map of your mind. Second, challenge it. Ask, is that belief true in all situations? Where did I learn it? Does it serve the trader I want to become? Third, replace it, not by force, but by repetition. Create new affirmations, speak them daily, embed them in your practice. And finally, prove the new belief through action. Trade small but aligned, take the loss and stay calm. Miss the setup and forgive yourself. Every micro action builds a new self. Remember, your results are always a mirror of your inner alignment, no exception. When your beliefs and your method match, execution becomes effortless. But when they conflict, trading becomes war. In the next chapter, we'll expose one of the biggest symptoms of this inner war, the toxic need to keep analyzing after the signal has already been given, and how that overanalysis isn't intelligence, it's disguised fear. Right now, check your shoulders. Are they tensed? That tension? That's not from reading. That's muscle memory from your last losing trade. Drop them. Breathe. Because what comes next will only land if your body is ready to receive it. Pause the video. Open your journal. Write one belief that might be sabotaging your trades. Start with, deep down, I believe losing means, don't think too hard. Let your hand write what your mind already knows. This single sentence could reveal why you've been stuck. And awareness is always the first step to freedom. Chapter 3, the paralysis of perfection. The setup is there. The rules are met. The signal has fired. But you don't pull the trigger. Not yet. You hesitate. You zoom into a lower time frame. You recheck RSI, MACD, news sentiment. You think, maybe I'll wait for a bit more confirmation. But what you're really doing is stalling. What looks like analysis is often just fear in disguise. Overanalysis is how traders avoid responsibility. Because as long as you're still analyzing, you haven't committed. You haven't risked. You haven't exposed yourself to being wrong. So, you stall, hoping the market will make it more obvious, hoping that extra candle will ease the doubt. But it won't. Because the doubt isn't in the chart. It's in you. And that's what most traders miss. The search for certainty is endless. And trading doesn't offer it. It offers probabilities. It offers structure. But never certainty. And if you wait for that, you'll either miss the move or chase it too late. Either way, you lose. I want to bring you into a real moment. a Forex trader at CMC Markets, known for a disciplined strategy on GBP/USD, shared how he used to suffer from analysis loops. He'd set alerts, prep his levels, and when price reached them, he'd freeze. He told himself he needed to double confirm, but the truth? He didn't trust himself. Not the system, himself. After weeks of missed opportunities, he committed to a new rule. Once the checklist is complete, trade must be taken. No second guessing, no gut override, just execution. The result? He still took losses, but he finally got data. He could now measure his edge in motion, not in theory. And his mindset changed, because execution, even with small losses, built trust. Every time he acted despite fear, his brain rewired. This is the paradox. Overanalysis feels safe, but it kills growth. Execution feels risky, but it builds identity. If your system says go, you go. Not because you're sure, but because your edge demands consistency. The moment you let fear negotiate with your system, you're no longer trading probabilities. You're trading emotion. And emotion doesn't have a win rate. So here's what to do. Write a checklist for your setups. Make it black and white. No room for interpretation. Then commit. If all boxes are checked, you take the trade. No debate, no delay. Do this 20 times in a row. Track the results. You'll find that the outcome matters far less than the process. Because what you're training isn't just execution. You're training decisiveness. And in trading, hesitation is more expensive than being wrong. The goal isn't perfect trades. It's aligned action, fast, clean, consistent. Every time you hesitate, ask, what am I really afraid of? Losing money or losing identity? Once you see that, the decision becomes clear. The market isn't waiting for your confidence. It's moving with or without you. The question is, are you willing to move with it? In the next chapter, we'll shift from problems to solutions. You'll learn how to build the kind of discipline that doesn't break under pressure, and a trading plan so clear it eliminates all emotional loopholes. Quick check-in, how are you feeling right now? We've covered the mirror of trading, the war in your mind, and the paralysis of analysis. Heavy stuff. Here's a story to lighten the mood. A trader once told me he named his stop-loss Steve. Why? Because Steve always has my back, even when I don't. Sometimes humor is the only way through the pain. Now, ready for the transformation to begin? Chapter 4. From Chaos to Clarity. Discipline is not about grit. It's not about forcing yourself to do what you hate. It's not even about having rules. Real discipline, the kind that separates the professional from the impulsive, is about observation. It's about watching your mind when it wants to react and choosing not to follow. Most people think discipline means control, but in trading, control is an illusion. You can't control the market. You can't control outcomes. You can't control volatility. The only thing you can control is attention. That's why true discipline is attention in motion. It's your ability to observe your own thoughts, your own triggers, your own patterns, and refocus them toward alignment. Mark Douglas called it a conscious commitment to stay aligned with your objective. And that objective isn't profit, it's execution. Let me take you into a real story. A crypto scalper in 2021 was riding the hype wave of Dogecoin. He'd made 23% in a single week. But then came a sudden flush. Doge dropped 18% in 3 hours. His plan was clear. Stop loss at 5% max. But when the red started pouring in, he froze. Then he moved the stop. Then again. The loss ballooned to 20%. And after that, he spiraled. Took another impulsive trade on Shiba, trying to make it back. That one failed too. In 2 days, he gave back everything. And it wasn't the strategy's fault. It was the moment he stopped observing, the moment he fused with fear, the moment he let the voice in his head take the wheel. If he had paused, if he had watched the panic like clouds passing through sky, maybe he could have responded differently. That's self-discipline, not perfection, not resistance, but presence. It's a practice, and it starts small. The next time you feel urgency in your body to click buy or sell, pause, breathe, name the feeling. Is it fear, hope, revenge, loneliness? Don't fix it, just name it. Then ask, is this action aligned with my plan or with my pain? That single question can save you thousands of dollars. Because most trading errors aren't execution errors. They're emotional reflexes, and reflexes dissolve when observed. This is how professional traders do it, not with willpower, but but with structure, with rituals, with journaling, with accountability, with systems that catch them before the fall. So ask yourself now, what is your plan for staying focused when the storm hits? Not your trading plan, your psychological one. Do you have a checklist for your emotional state? Do you track your impulsive moments? Do you build in space between signal and execution? If not, your edge will never reach its full potential. You'll keep giving it back, not because your system is weak, but because your discipline isn't real. Listen, do you hear that? That's the sound of absolutely nothing. No alerts, no notifications, no market noise. For the next 10 seconds, just sit with that silence, because inside that silence is where real traders are born. Now, let's get practical. Your emotions love ambiguity. They thrive in the gray zones. The maybe I'll wait, the just one more confirmation, the this one feels different. That's where discipline goes to die. And that's why most traders never become consistent, because their rules are soft, their plans are flexible, and flexibility, when driven by emotion, becomes sabotage. What you need is clarity, a plan so rigid it removes all decision-making at the moment of execution. You don't ask, should I enter? You already know. You don't wonder, how much should I risk? It's already defined. That's how professionals trade. They don't trust their feelings. They trust their structure. Let's take a real example. A trader using Axie's price action method on GBP JPY spent 3 months losing money despite having a solid strategy. The issue wasn't the system. It was discretion. He would tweak entries based on gut feelings, adjust stops because of market noise, and skip trades if the last one was a loss. Then he did something radical. He created a trading checklist with binary answers. Was the candle above the 50 EMA? Yes or no? Did price break structure with volume? Yes or no? Was RSI confirming trend momentum? Yes or no? If the answers aligned, he entered, no second guessing. He also set a fixed stop loss, fixed position size, and a defined take profit. In 1 month, his win rate didn't explode, but his emotional swings disappeared. His account grew slowly, and his confidence grew even faster, because clarity creates conviction. Now look at crypto. A grid trading strategy on ETH, documented on Reddit's R Crypto Markets, followed a similar path. The trader automated the strategy and defined exact entry zones, lot sizes, and exit logic. He could sleep without checking charts. Why? Because there was no subjective interference. The plan handled the chaos. He just followed it. That's what a real trading plan gives you. Psychological freedom. The less you have to decide in the moment, the more you can focus on execution. So, how do you build it? First, define your edge. Be precise. Not when price looks strong, but when price closes above previous resistance with confirmation volume. Second, set fixed parameters. Entry trigger, stop loss, risk per trade, target zone. Use exact numbers. Third, write it all down in checklist form. Treat it like a pilot before takeoff. If it doesn't pass, you don't fly. Fourth, commit to a minimum sample size. 20 trades, no changes, no emotions, just follow the plan. If the system works, it will show up in that sample. If it doesn't, you'll have clean data to evaluate. But until you do this, you're not really trading. You're guessing with structure, and that's not enough. Rigid plans don't make you inflexible. They make you focused. The more objective your plan, the less power your emotions have. And the less power your emotions have, the more clearly your edge can shine. In the next chapter, we'll explore how thinking changes everything, from obsessing over individual trades to understanding probability like a casino owner. Screenshot your trading rules right now, not tomorrow, not after you perfect them, right now. Share them in the comments with this phrase, "My clarity begins today." This public commitment increases your follow-through rate from 20% to 80%. The market rewards action, not intention. Chapter 5, Thinking and Probabilities. Something changes the moment you stop thinking, will this trade win? And start asking, am I trading my edge? That shift, from outcome to process, is the birth of freedom. Not the freedom to win all the time, but the freedom to act without fear. That's what thinking in series does. It detaches your identity from each individual trade and anchors it to long-term alignment. It rewires your brain from gambling to probabilistic decision-making. Imagine this. You take 20 trades. You've defined your edge. You've tested it. You know your system works over time. Suddenly, one loss doesn't shake you. Two losses don't scare you. Even five in a row don't break you, because you're not evaluating yourself on the last trade. You're running a process, and you trust the math. This is exactly what a trader from Forex.com discovered after years of inconsistency. He was trading EUR/USD breakouts, but constantly tweaking his method after a couple losses. He never gave any system enough time to prove itself. Then one day, after reading a trading psychology guide, he committed to running a block of 50 trades with zero adjustments. No emotional interference, just disciplined execution. At the end of those 50 trades, he wasn't just profitable, he was calm, because he saw the truth. It's not the market that's inconsistent, it's the trader. When you think in series, you remove the drama. No trade is special, no outcome defines you. You flow in and out with neutrality. A crypto trader once described it perfectly. I finally stopped asking, how much can I make on this one? And started asking, did I do my job? That changed everything. That's the mindset you need. It doesn't mean you become robotic. It means you become deliberate. Every trade becomes a data point. You can track patterns, adjust sizing, refine risk. But most importantly, you stay in control. This is how casinos win. Not by predicting the next spin, but by knowing their edge over thousands of plays. They don't flinch when someone hits a jackpot. They don't celebrate on a win. They stay consistent. Because they think in series, you must do the same. But here's what most traders don't understand about probabilities. You can do everything right and still lose. You can follow your plan perfectly, and the trade can still go against you. That's not failure, that's probability. And until you fully accept that truth, not intellectually, but emotionally, you'll keep trying to turn trading into something it's not. Prediction, certainty, control. But trading doesn't offer those. What it offers is opportunity. What it offers is edge. Trading is like flipping a weighted coin that lands on heads 55% of the time. Sounds great, right? Except most traders flip it 3 times, get 2 tails, then spend the next hour researching, is my coin broken? On Reddit. Edge is not a guarantee. It's a statistical advantage played out over time. It means that if you execute your setup 100 times, the positive expectancy will reveal itself. But it might not reveal itself on trade 2, or trade 5, or even trade 10. That's the uncomfortable part. And that's where most traders give up. Not because their system failed, but because their expectations did. A trader on Light Finance once documented how he ran a strategy on major pairs with a 60% win rate, but the results didn't show up until after 30 trades. The first 10 were break-even, the next 5 were slightly red. Then the compounding kicked in. He made 18% in the final 15 trades. Same system, same rules, but he only got the result because he understood probabilities, because he didn't flinch during the drawdown. He didn't question the edge every time it lost. He stayed. And that's what most traders never do. They leave just before the edge appears. They abandon the method right before the stats were about to tilt in their favor. Why? Because deep down, they still believe trading is about being right. They want to feel smart, feel safe, feel in control. But probability doesn't care how you feel. It cares how you act. If you can act with consistency through randomness, you'll win. Not every time, but over time. Your job is not to know what happens next. Your job is to execute your method without attachment, and trust that over time, your edge will speak. It always does, but only to the trader who listens with patience. So ask yourself now, when you take a trade, are you secretly trying to be right? Or are you playing your edge, knowing full well that anything can happen? The first mindset is fragile. It needs wins to feel okay. The second is powerful. It's untouchable by outcomes. That's where you need to live. Because once you do, losses stop feeling personal. They start feeling neutral, just part of the process. And from that place, you'll start to feel something rare in trading: peace. In the next chapter, we'll make this all concrete with the single most powerful exercise for rewiring your mind: the 20-trade transformation that works for both Forex and crypto. Quick challenge: can you name your last 5 trades without checking? If not, you're not thinking in series yet. If you can, write them in the comments. Not the results, just the fact that you remember them. That awareness alone puts you in the top 10% of disciplined traders. Chapter 6, the 20-trade transformation. Let's take a moment here. Close your eyes if you need to. You've just learned something that took most traders years to understand. the difference between trading outcomes and trading process, between ego and edge, between noise and signal. Breathe that in. You're already ahead of where you were 45 minutes ago. You've studied the charts, you've refined your system, you've written your plan, but none of it matters until it's lived. Not just once, but over and over, until it becomes identity. That's what the 20 trade exercise does. It rewires the way you think, feel, and act. It burns probability into your nervous system. It shifts you from reactive to professional. Most traders never do this. They take a few trades, then adjust. They chase performance, tweak parameters, switch systems midstream. That behavior kills edge, because edge only appears over time. Not in one trade, not in 5, but in 20, 30, 50, with consistency. The exercise is simple, but it will test you. Choose one setup. Define your rules in binary terms. Then commit. You will take the next 20 valid trades exactly as planned. No skipping, no adjusting, no judging based on recent outcomes. If a trade fits the criteria, you enter. You manage risk exactly as outlined. You exit by rule, not emotion. And you track every trade, not just P&L, but your emotional state, your confidence level, your urge to interfere. Put your hand on your chest. Feel your heartbeat. Is it racing, calm? That rhythm right there, that's your trading tell. When you learn to trade from a steady heart instead of a racing mind, everything shifts. Keep your hand there for this next part. Feel what happens to your pulse when we talk about losses. One trader who shared his experience on Medium ran this exercise on USD CAD using a simple trend continuation strategy. He had a 52% win rate over hundreds of backtests. But live trading, he kept cutting winners early, holding losers too long, and second-guessing signals. So he started the 20 trade rule. He wrote the plan on paper, set alarms, used an accountability partner. The first 5 trades were a roller coaster. 2 losers, 1 break-even, 2 small wins. He wanted to quit, but he stayed. By trade 12, his execution became faster. By trade 15, he stopped flinching. By trade 20, he was up 4%. But more importantly, he felt calm. The noise was gone, because he stopped measuring himself by outcome. He measured alignment. That's the real win. Now, let's look at crypto. A trader on IG Markets documented how he applied this during a particularly wild week on BTC USDT. His setup was simple: breakout of consolidation with volume spike and confirmation on the 15-minute chart. He defined his stop, his take profit, his entry zone, everything mechanical. The challenge? Stick to it for 20 consecutive setups without adjusting. The first 4 trades were losers. Not huge, all within risk, but enough to trigger doubt. Price chopped sideways. He was tempted to skip, but he stayed. By trade 7, the structure returned. 3 quick wins, then another drop, then a big breakout. Trade 12 was a 2-to-1 winner. Trade 15 ran overnight and hit his target while he slept. By the end of 20 trades, his profit was modest, but his mindset was transformed. He said, "For the first time in months, I wasn't exhausted by the market. I was just trading the plan." That's what this exercise gives you, an anchor in volatility. Whether you're trading EUR/USD pullbacks or ETH breakouts, the principle is the same. In Forex, you deal with structure. In crypto, you deal with chaos. But the 20 trade rule works for both, because it's not about the market, it's about your response to it. The exercise breaks the fantasy of perfection. It forces you to accept losses without flinching. It builds the muscle of consistency, and it shows you with brutal clarity whether your system works or whether you're just trading hope. And the key is this: no matter what happens in those 20 trades, you don't change the plan. If you lose the first 5, you keep going. If you win the first 10, you don't over-leverage. You stay the course. Because only after 20 clean trades can you evaluate properly. Only then does the data speak truth. Anything before that is noise. This is the mental gym of trading. And if you've never done it, then you've never really trained. The 20 trade exercise will change you. But there's one rule I haven't mentioned yet, the one that makes it impossible to fail. Never judge the exercise until all 20 trades are complete. Not at trade 5, not at trade 10, not at trade 19. The magic happens in completion, not perfection. In the next chapter, we'll shift focus from systems and execution back to what really sustains the long game, learning to love the process more than the profit, Because the traders who endure are never the ones who chase results. They're the ones who master rhythm. Here's your homework. Screenshot your trading rules right now. Not tomorrow, not after you perfect them. Right now. Share them in the comments with this phrase: "My 20 trade journey starts today." Find one person who comments and become accountability partners. Check in after every 5 trades. This simple act of public commitment will change your follow-through rate from 20% to 80%. Most traders enter the game because they want to make money. They stay in the game, if they last, because they fall in love with the process. At first, profit is everything. Every green trade is a dopamine hit. Every red trade feels like failure. But over time, if you're paying attention, something shifts. You realize the outcome is unpredictable. You realize that even perfect trades lose. And you start to ask a better question. Not, did I make money? But did I execute well? That's the turning point. That's when you stop chasing highs and start building a career. I once met a trader who kept a photo of his daughter next to his screen, not for motivation to make money, but to remind himself she needs a father who keeps his word, not one who wins every trade. That shift, from proving to progressing, changed everything for him. What photo would change everything for you? A trader with CMC Markets documented his transformation in a public diary. In the early days, he was obsessed with making a daily target. Every trade was measured by how close it got him to the number. He'd win and push for more. He'd lose and force a comeback. Either way, he was controlled by result. Then something broke. 3 losses in a row. All inside plan. All clean setups. But emotionally, he spiraled, tried to make it back, doubled risk, and lost again. That day cost him a month of gains. Not because of the strategy, but because he couldn't separate himself from the outcome. After that, he made a new rule: track only the quality of execution, not the money. He built a scoring system: 1 point for rule-based entry, 1 for rule-based exit, 1 for risk managed. If he got 3 points, it was a perfect trade, win or lose. Within 3 weeks, his stress dropped, his confidence grew, and ironically, so did his profitability, because his attention moved to the one thing he could actually control: behavior. A swing trader using ETH with Axie shared something similar. She started journaling trades with the prompt, "What did I do well, regardless of result?" That shifted her focus from fear to feedback. Over time, her entries improved. She stayed longer in winners. She cut losers faster. Not because of a new setup, but because her mind was no longer tangled in the money. She loved the craft. That's what the professionals understand. They're process addicts. They study patterns, refine edges, review journals. They think like athletes, like musicians, showing up each day to sharpen the blade, not to win a trophy. And when profit comes, they see it as a byproduct, not a goal. So ask yourself honestly, are you trading to grow or trading to prove? Are you measuring process or just counting dollars? Do you track how well you followed your method or just whether the P&L was green? The mindset you build determines how long you last. The more you fall in love with repetition, with structure, with nuance, the less power the outcome has over you. In the next chapter, we'll zoom out and look at real stories from the field, traders who shifted from pain to precision, from chaos to clarity, and what you can learn from their journey. What are you really measuring? Take 30 seconds right now. Think about your last week of trading. Did you track your emotional state, your execution quality, or just the money? If it's only the money, you're building on sand. Start tracking what actually matters, your behavior. That's where transformation lives. Chapter 8. Lessons from the battlefield. We're deep into this journey now. If you need to pause, pause. If you need to replay a section, replay it. This isn't a race, it's a transformation. And transformation takes whatever time it takes. Stories teach what theory can't. They make ideas real. They show what it looks like when a mindset shift moves from the page to the trading screen. And in the world of trading, the best lessons often come from those who've walked through fire and came out with clarity. One trader, featured in an Investopedia profile, shared how he nearly quit after losing 30% of his account during a non-farm payroll event on USD pairs. He wasn't new. He'd been trading for 2 years. His strategy was solid, a breakout pullback method with defined risk. But the volatility of that release, combined with his emotional overconfidence, wrecked him. What changed wasn't his system, it was his perspective. Instead of chasing revenge, he took a month off. He studied every trade. He realized that while the setups were valid, his size was inflated, his stops too tight, and his mindset reactive. He rebuilt, came back with smaller size, same system. But now he followed a 20-trade plan every month, never changing it midstream. 2 quarters later, he was profitable again. Not because of better trades, but because of better behavior. Another story comes from a trader who applied Bali scalping strategies to EUR/USD. He shared his journey on Light Finance's platform. Early on, his win rate hovered around 50%. He would break even, then lose, then spike up, but nothing stable. Then he added one rule: no analysis after entry. Once in the trade, he didn't touch it. No moving stops, no partial exits, just pure process. That single change added 20% to his annual returns because he stopped interrupting his own edge. Now, let's move into crypto, where volatility runs higher, emotions spike faster, and the same principles apply with even greater urgency. Crypto is fast. It's chaotic, emotional, and unforgiving. But within the noise, a certain type of trader learns to thrive, not by predicting the chaos, but by designing systems that move through it without panic. One trader shared on Twitter how he lost over $190,000 during the Luna collapse. He had entered near the top, convinced by community hype and an emotional attachment to the project. As the price began to drop, he kept adding, the logic, it can't go to zero. But it did, and with it, so did months of gains. The Luna trader didn't just lose $190,000. He lost his belief that he was smart, that he could trust himself. He told me, the money I could make back, but that voice saying I'm an idiot, that took a year to silence. Maybe you know that voice too. What changed him wasn't the loss. It was what he did after. He started studying probability. He read Mark Douglas, rewrote his plan, and for the next 6 months, traded only one setup, a BTC/USDT breakout system on the 1-hour chart. Fixed risk per trade, maximum 2 entries per day. No social media, no news, no predictions. Just structure. The account recovered, slowly, but his psychology changed faster. He said, for the first time, I didn't care about being right. I just wanted to stay aligned. Another case comes from a trader who hedged BTC with CFDs during a high volatility period. Documented through IG Market's case study series, she developed a rule-based hedging strategy after noticing her biggest losses came from directional bias. Instead of trying to call tops or bottoms, she built a system that allowed her to neutralize risk quickly, then re-enter once momentum confirmed. Over the next 90 days, she reported a 30% net return, not from perfect entries, but from perfect risk responses. These stories reflect a deeper truth. Success in trading doesn't come from prediction, it comes from preparation, from removing the need to be right, from letting go of the illusion that you can outsmart the market. What these traders did right wasn't magical, it was structural. They simplified, they removed noise, they honored edge. Most importantly, they respected volatility instead of fighting it. That's your model, not the influencer flashing 6-figure trades, but the quiet, consistent trader managing risk while the world swings wildly. Stories like these reveal the real transformation. It's not flashy, it's not overnight, but it's deep. It's the shift from noise to structure, from drama to data. These traders didn't become perfect. They became consistent. They didn't eliminate emotion. They learned to trade alongside it without letting it drive the wheel. One thing they all shared, a commitment to journaling, to tracking not just trades, but internal states. They wrote about fear, hesitation, excitement. They rated their discipline after each session, and slowly they built self-awareness, the foundation of all growth. You can do the same. You don't need to wait for disaster. You can start now. Pull your last 10 trades. Rate them on execution, not outcome. What patterns emerge? Where do you deviate? What triggers you? That's where the work begins. Not in the charts, but in the mirror. In the final chapter, we'll pull everything together. You'll see how this isn't just about trading anymore. It's about who you're becoming, and how the market, if you let it, can sharpen you into someone unshakable. What's your biggest trading scar? The loss that changed you. The moment that broke something open. Share it in the comments. Not the whole story, just the lesson it taught. Sometimes our deepest wounds become our greatest teachers, and sharing them helps others know that we're not alone in this journey. Chapter 9, The Infinite Game. There is no finish line in trading. No moment where you arrive, complete, untouchable. The professionals know this. That's why they keep evolving. What separates the ones who last from the ones who fade isn't a holy grail system. It's their relationship with change. They adapt, not react. They refine, not restart. They treat trading not as a destination, but as a living practice. One advanced trader on CMC markets revealed how he integrated RSI with series of trade thinking on USD/JPY. He didn't just look for overbought or oversold. He built a rule that RSI had to align with his edge across multiple trades before increasing size. This allowed him to scale without emotion, based on data, not feeling. Over 6 months, his performance didn't just improve, it stabilized. Because his risk curve adapted to the rhythm of his edge. In the crypto space, a veteran trader merged smart money concepts with probability-based execution. He didn't chase liquidity. He waited for specific displacement zones on ETH, then used VWAP confirmation to align entry and stop placement. This hybrid model was built after a year of journaling failed impulse trades. Instead of scrapping everything, he added layers. Strategy didn't replace mindset. It matured with it. That's the key to evolution. You don't chase complexity. You chase precision. You experiment, but only after you've built a foundation of consistency. Once you've executed 20, 50, 100 clean trades, then you begin to tweak. Not emotionally, but strategically. You test, journal, adapt. The process becomes your lab, and your journal becomes your compass. Evolution doesn't mean more indicators. It means deeper refinement, less noise, more signal. Over time, your strategy becomes an extension of who you are, shaped not by hope, but by data, by lived experience. And you start to trust your system like a pilot trusts their instruments. That's when the game changes. You no longer overthink entries. You no longer flinch at losses. You review, learn, realign. You treat every trade as part of a bigger arc, a lifelong mastery curve. This is what it means to become unshakable. Not flawless, not fearless, but centered, aware, unmoved by randomness, devoted to structure, and grounded in your own process. Because trading is never just about the charts. It's about the self you bring to the screen, the discipline you uphold, the integrity behind your decisions. That's what this entire journey has been about. You're not here to trade perfectly, you're here to trade honestly, to build something inside yourself that can hold steady, through drawdowns, through wins, through noise. The charts may change, the market may shift, but the one constant is who you become along the way. And now, after 9 chapters, the question isn't whether you can learn this. It's whether you're willing to live it. Every session, every trade, one decision at a time. What's your next evolution? Not your next strategy. Your next level of self-awareness, of discipline, of alignment. Write it down. Make it specific. In the next 20 trades, I will then do it. Because evolution isn't a concept. It's a commitment lived one trade at a time. Chapter 10. Your new identity. If you've made it this far, you already know. This wasn't just another trading video. This wasn't about strategies, indicators, or market predictions. This was a journey into your own psychology. A mirror held up to the part of you that trades not just with a mouse, but with memory, emotion, and identity. You've walked through 10 chapters. Each one peeled back a layer. Each one revealed a pattern. The impulsive entry, the fear of being wrong, the over-analysis disguised as logic, the loop of revenge trades, the ego wrapped around a single outcome. And deeper than all that, the truth. The market doesn't define you. It reflects you. Now the real work begins. This isn't the end of a video. It's the beginning of new behavior. You're not here to become a perfect trader. You're here to become a consistent one who acts from process, not panic, one who measures alignment, not emotions, one who honors the edge, not just when it works, but especially when it doesn't. So here's what to do now. Take one system, just one, strip it down to its core, write the rules in black and white, print them, tape them next to your screen, commit to 20 trades, no skipping, no tweaking, no emotional edits, just pure execution. Track them, journal them, score yourself not on outcome, but on discipline. And when it gets uncomfortable, because it will, come back to this video. Remind yourself, the win is not the green candle. The win is staying aligned. If this video spoke to you, don't just close the tab and scroll away. Pause. If you're still here, you're different. You're not looking for the holy grail indicator. You're looking for the holy grail inside yourself, the part that can lose with grace, win without arrogance, and show up tomorrow regardless. So here's my challenge. Comment below with these 3 words that complete this sentence. I used to trade for blank, blank, blank. Then add, now I trade for blank, blank, blank. Example, I used to trade for validation, revenge, escape. Now I trade for process, growth, freedom. Your turn. Make it real, make it public, make it count. What's the one pattern you saw in yourself most clearly? What trade or moment did this video remind you of? And if you're ready to begin again, differently this time, write it down. Put it in the comments, say it out loud. Because when you make it real, your mind starts to shift. And if this video found you at exactly the right moment, when you needed to hear this most, then share it with one trader who's still fighting their demons alone. Because the market will always be there tomorrow. The question is, which version of you will show up? The one who chases or the one who flows? You decide right now with your next trade. And if you're watching this with headphones in the dark or on a second monitor while you trade, know this. There's a version of you that already knows how to do this. The steady version, the focused version, the one that no longer flinches at loss or dances with greed. The one who shows up one trade at a time and builds something unshakable. That version isn't far away. It starts now, in this moment, in this trade. Welcome to the process. Welcome to Trading Psychology Stick. Subscribe not for tips or tricks, but for the journey of becoming who you're meant to be as a trader. Because this channel isn't about the market, it's about the mind that meets it. This is the way.